Mr. Rehn, thank you so much for joining us on Street Science. One of the big topics that came out of the IMF was the fact that they've picked up on the huge amount of fiscal stimulus in the US. They've massively upgraded the US growth forecast, but also the rest of the world. They do see spillover effects from US fiscal stimulus into the broader economy. Can I just start off by asking you whether or not you see some positive spillover effects from the US fiscal stimulus into the Eurozone economy per se?
Thank you. Good morning. Yes, we see some positive impact, and that's certainly good news. We both have quite significant fiscal stimulus, both in Europe and in the United States. In Europe, it is composed of national budgets and the EU Recovery Fund. In the US, we are of course following the developments very closely, and our estimate roughly is that it might have something in the scale of 0.3, 0.5, so perhaps a bit less than half percentage point of GDP impact in Europe, which is important and positive.
Well, that's decent, especially given your forecast, your recent forecast didn't include that estimate, so it could be potential upside of 0.3 to 0.5%. I want to take it back to yields as well and the yield spillover, because we've also seen a rise in interest rate yields that has prompted the reaction from the ECB to buy more PEP purchases. To what extent do you think the rise in Bund yields and sovereign bond yields in Europe has been driven by the rise in yields in the US versus, say, people just pricing in higher growth prospects for the Eurozone right now?
I think it's a combination of these two. What is the relative share of these two? It's difficult to say, but both play a role. And that's why, as we saw certain tightening of bond yields spreads in the early part of this year, we decided to significantly increase the purchases under the pandemic emergency program, and we are seeing maintaining favorable financing conditions in the Eurozone. Concerning the positive news, it's of course good that we have good news, but I would not jump the gun yet because the economic outlook is still, especially time-wise, very dualistic. In the near term, there is still plenty of uncertainty about the speed of vaccine rollout, about possible extent of virus mutations. But yes, in the second half of this year and next year, we see the recovery strengthening, and certainly the outlook in this sense is more positive. But in terms of policy response, it is better to be safe than sorry and maintain a significant degree of accommodation in monetary policy in order to build a sturdy bridge over these troubled waters of the corona pandemic.